Good morning, good morning, good morning, good afternoon, good evening, wherever you might happen to be in the world. Glad to have you here. Welcome to today's daily market commentary. It's Wednesday, it's hump day. This is our live edition. Do me a favor, make sure that you can hear my voice and see my face. If you could just type in the chat box and say hello, that would help me a lot to know that everybody can kind of hear and see me. So Liz, good morning, Liz. Hello, Don from the UK and everybody here that's with us today. We are going to go ahead and get rolling. Okay, good. Loud and clear. Beautiful, beautiful, beautiful. So we're going to do what we do every day. We take a look at our futures markets from an educational perspective, identifying breakouts and reversal trades. Real quick announcement. Tomorrow night, we're going to be doing a webinar at Traders Army. It's going to be a quarterly checkup. We're going to look at it from a big picture market perspective. So if anybody feels like joining us, I'll try to make sure that I throw that link in the chat box for that checkup, so that you see what we have coming up for that webinar. At the very least, if you're on our mailing list, you'll get an email with a link to it. If you're not on our mailing list, just go to tradersarmy.com, become part of the mailing list. Now, this is let me throw this in here real quick, and there you go. I put the link in there so you guys can watch it if you want to. Is my volume a little low, Trent? Literally, today is my first day back in the studio with like my mic and things like that. So hold on, let me crank up the volume a bit, and I'll see what I can do about that. Give me just a heartbeat. There we go. Hopefully that's a bit better. Hopefully that's a all right. So hopefully that gets us to where we need to be. I can crank this thing up here a little bit over here. So, okay, beautiful. Liz, I don't hear anything else. You're killing me, Liz. All right. So let's go ahead and get rolling as we are about to get started. Let me shrink my face, make my face a heck of a lot smaller and everything else a heck of a lot bigger, because Lord knows the last thing you want to see is more of my grill. Okay, let's go ahead and get started. Remember, as we go through this, please ask a lot of questions. The more questions you ask, the better this session is. Yesterday, we had a really nice move in the ES, and we've talked about the fact that the ES, we have a standing breakout trade on the all-time high. It's just a standing long breakout trade. And when we look at this is that we did get above that all-time high yesterday and really, really continued that rally a bit higher. So as I look at kind of where that kind of standing breakout position is, and as I'm looking at this, it appears that my screen isn't showing the whole way. So hold on, let me readjust my screen size, because I think you guys aren't seeing everything that I'm seeing. Sorry about that. Like I said, this is my first day back. We don't have the full studio set up as of yet, but we're getting pretty close to having everything set up here in the house. Hopefully they'll get through with painting here soon. So anyway, breakout above that all-time high, very strong move. We did have a drop off of our little 15-minute level yesterday. It came down into the zone. We got a very strong move out of that level. It popped below it by a few ticks, so you may or may not have gotten a quick stop out in that position, depending on your risk tolerance. I mean, it literally went below it. It went below it by like three ticks, I think is what the number was. So if you're giving yourself some wiggle room, you're probably still in it. Got a really nice run out of that, and it's continuing the move. And then we came to the all-time high, and we popped even greater above that all-time high. So now what do I need to look for? I need to look for a retracement. So the first thing I'm going to ask is, where do I look for my shorts, right? Where am I going to look for my shorts and finding a short opportunity that I can get in on this? Where's somebody tell me, when I'm looking for my shorts, where am I looking for that reversal? Right, exactly. What shorts, right? We don't short the all-time high. There's no reason to short that all-time high. The only way that I can take a short is if I get a basing area somewhere in this region. And that basing area that I would want to get would be somewhere probably right in here. If I got basing right here and we chopped along at this line, then that might give me an opportunity to get short. And my short would be down to about this breakout line or just a little bit above there. But that's all I can do. I don't feel like trying to find a supply area up above me. A supply area up above me, I think, is going to be a folly, where I would just be hoping to get lucky. And I guarantee you there's lots and lots of traders out there that shorted this yesterday. Lots of people that shorted this area yesterday and got run through. By the way, they probably also shorted this area and they probably also shorted this area, right? And so when we look at shorting the all-time high, I'm going to be much better off if I'm buying on the pullback, right? So what I want to do is I'm going to look to this area over here for a potential retest, which is if we do get a pullback, this area here where we had the breakout could be a bit of a retest. Now, it's not a great time of day, and it's also not the origin of the breakout. So when we look at this, I'm actually going to go a bit lower. And when I go a bit lower, I'm going to come down to about this region here. And that's 3504 by 3513. Now, the reason I'm going down to this area here, a couple of reasons. Reason number one, it is during U.S. market open. This region here, while it's a pretty clean level and the breakout point is not as strong of a zone because of the time of day that it was created. Now, it very well still might hold. And so if you want to be a little bit more conservative, what you might do is take this as a confirmation entry based upon the time of day that it was created. And remember, we always look for our times a day that levels are created to tell us what's the strength of that level and does it make sense, right? So I think you've got 35.29 by 35.25 as a first level where we could see a reversal, and I think that makes sense for a confirmation short. And then you've got 35.13 by 35.05 as I think the better limit entry. Now that's a better limit entry for a couple of reasons, but to me the biggest reason being is that it's good, strong market time of the day, and we've seen that it's acted as resistance in the past, and we're just above that pivot in here. Okay, so those are my thoughts on the S&P. Now, for those of you that trade the SPX, that trade the SPX one-day options, if you're looking for one-day options positions, where might you want to look today? And by the way, how many of you in there? Yeah, the upper one is, definitely around yesterday's pit session high and the pit close for sure. That's actually a really great point, Liz. If I pop back to there, that's because that's actually close to where we broke out, right? And it's the same time of day. So I think it's a pretty good level from a structure standpoint. I'm just always concerned with that time of day. So, Lily, great question. Where do you place your stop with that long wick below? So the tightest we can place our stop is if we go to the 15 minutes. The absolute tightest is here, 3501. And that's because of this long wick, on the wick on this long green candle, right? So the wick on this expanded range green candle, but getting below that area would be the absolute tightest that we could do it. All right, so let me slide back to that SPX. How many of you out there, by the way, trade SPX one-day options? And if you're watching this on the recording and you're not watching live, do me a favor, leave a comment down below. Let me know if you trade the one-day expiration style options of the SPX. And the reason that I ask that is because these are oftentimes really, really good one-day trades, but you've got to be aware of what can happen both above you and below you if you're going to do the iron condor style. So when I look at this and I go to a 4-hour chart, Kurt says occasionally, John, yes, Andrew occasionally, Sandy, no. Well, they are a pretty good setup, and what you got to do, though, is look for areas where you don't think price is going to go. So a couple of ways to look for areas where we don't think price is going to go. One way to do it is to utilize a Bollinger Band. And a Bollinger Band, if we're near an upper band on the Bollingers, then we very rarely think we're going to go too far up above there. I mean, that gives you 2 standard deviations on that. And so I think that if we can find a level today that's somewhere down in here, I don't know that you'll get enough credit for a level down here, but today is a dangerous time to do it. And today's a little bit more risky to do it because we're already so high up and riding this wave that you could get either a very strong pull back to the reversion to the mean. And if you get a reversion to the mean, that means that you're looking at about this range here, which is 3450. Well, are you going to get enough credit at that 3450 level to make this make sense? That's 70 points away from where we are today. Do I think the S&P is going to move 70 points today? Not really. If you go to the 1 hour chart, you've got a much tighter range. And on the 1 hour chart, you're still looking at the next area of quality demand. And when I go to the next area of quality demand, I don't really have anything super clean, right? When I look at this hourly chart, now remember, we're trading higher than that in the SPX. I just don't, I agree, Andrew. I don't see us getting that kind of a pullback today. So I don't think you're going to get enough credit to be able to do that trade. So I think that today may be a day where it's tough to get credit unless you go much tighter. And so I wouldn't do this trade right at the open today. I think you'd want to wait until the markets have been open for a little bit and then do it slightly after. All right, next, let's go to take a look at the NASDAQ. So I love Justin. For those of you guys that follow Justin Krebs does some of our trade picks, does some of our live trade rooms. He's part of the Traders Army team here. He put we had a trade pick out yesterday on this hourly level, and I love the tweet that he put out. He says, when you're right, but just not quite right. And that was yesterday on the hourly chart in the S&P, or excuse me, in the NASDAQ. In the S&P, I think there's no problem on that trade. You're doing okay. Shouldn't have gotten stopped out. And but on this one, you pop a little bit below, and then it continues to rally up. Now, obviously, we were looking at yesterday in the daily market commentary at both levels, right? We were looking at both hourly levels, and the funny part is that neither one of those hourly levels were really hit, because I was looking at one level up above and then this level down below. Yeah, it turned in between, right in between those zones. And really, if you look at the 15-minute zone where it turned, was this area right in here, right between those two levels. Right there, right in between those zones. Now, I will tell you, I discounted that, and the reason I discounted that level is because I've seen experientially that levels formed at that time of the day usually don't hold. And I would rather be wrong on a level that I pick more consistently at the good time of the day than have gotten lucky on a level that happened to make entry and it normally would fail. Does that make sense to everybody? I mean, I know that sounds weird to say that I would rather I'd rather be wrong on a level that is the wrong time of that is the right time of the day than be right on a level that's the wrong time of the day, because over time what that will do is that will promote bad habits. Right? That'll promote bad habits, and the bad habits I don't want to be a part of. And so for me, I'm okay with a little stop out like that, especially because the ES move was so strong. Yeah, Murray, I just made that word up. Do you like it? Experientially, it's. I think that's a word. Listen, this is why my wife does the homeschooling. All right. National Blueberry Popsicle Day. Awesome. Let's chat. Yeah, and I'm glad that you caught that, Kevin. I mean, and I will tell you, for me, the S&P was a great level setup, and NASDAQ, I'll take a little bit of a hit on that. Now, let's talk about a retest, right? Where do we get back in on some sort of a retest? So, looking back on a bit of a retest, if I pull up just a trend line, we are definitely overextended, no doubt. But how long can something stay overextended, by the way? How long can something stay overextended? As long as it wants, right? And so I'm looking here at this area right there as an opportunity where we have this upper wick right in here, okay? And that upper wick right in there, we can see that we had that big wick down, that bigger wick up, and then we did some basing before then, a very strong move. So you've got 12,279 by 12,238. And somewhere in there, we could get a decent reversal. Now, I will say that if we make it down to there, you're going to actually, I think, have an opportunity for a short below this Globex kind of pivot area right here. And you might actually get a little day trade from here down into this region if we get quality basing. Remember, the only way we can take those is with quality basing. If we get any basing at all between here and here, I'm not interested in that short, or excuse me, in that long, right? And the reason for that is because I can't, if I've said it once, I've said it 1,000 times, basing is the kiss of death before a level, right? Basing is the kiss of death before a level, and I absolutely don't want to see that basing come into play. All right. Nathaniel, what about the pivot? So you're talking this pivot right here, Nate? Right down here? So when I look at that pivot, it's a demand on the 4th. Yeah. So that pivot, I think, that's where we reversed. Yeah, that was a very strong reversal from yesterday, and I think it still could be valid. It's a retest of some of these levels here to the left. In order to get to that pivot, we've got to get through here, though, right? Oh, the 4-hour. Okay. Yeah. So on the 4-hour, it's actually a bit of a retest of this area here, which is fairly similar in look to what we have on the 1-hour, right? And so what I think is probably going to be best is for us to look at the upper level first. And if you like this pivot down here, which it's not a bad level, but it might make sense to look at it more on the 15. And even on the 15, you're going to have to take a pretty wide candlestick and then give it some room down below there for that region, right? So I think that if you want to take this one, let's shrink this 15 up a little bit. 12,279 by 12,251. No basing can be in that area, though, that's in the yellow, because that's going to invalidate that trade. If price kind of comes into there a little bit weakly. And if you're not as comfortable with it, you can make this a confirmation level, right? You can make this a confirmation level so that it can continue to run. Now, check this out. So here's something that I want to talk about. What if, let's talk about that ES for a minute. So let's say that you went long. How can I scale out of positions? Let's say that I get long on this ES trade that we talked about here. And let's say you get long on this ES trade down here at 35.29. And you get long one contract. Can I scale out of one contract? How can I scale out of one contract? If I just take one mini, how can I scale out of one mini lot? Like you say, well, I want to let it keep running, but I want to scale out of the position. But if I only get into one mini lot, can I scale out of that trade? Liz says all in, all out. Olsey, good luck with that. Because I know a lot of traders out there are one contract traders, right? Well, here's the interesting thing. If I want to scale out of a one contract trade, I can short a micro as it goes up. Think about that for a minute, right? So what's the opposite of going long? The opposite of going long is going short. What if you shorted a micro as it rallies up? Because that allows you to take some right. So that one's going to lose. You still stay long the one, and what you lock on the other, and then you just take your stop and move it up underneath that one. Now that's a little bit more of a backwards way to do it, but this is the only way that you can really do that. Now, if that continues to run, that one, because you're only short one or two micros, as long as you're still in this one here, you're going to have. Now the key is you've got to move your stop up to where you would short that micro. That would be the only way to let it continue to go. Well, it depends on your platform. I've actually done it in separate accounts. So for me, it's separate accounts. But the other, well, Liz, I agree with that. You can just take the micros long in the first place, right? You can take the micros long in the first place. But the problem oftentimes with that is the amount of commission forced on the micros, right? And that's one of the challenges of trading inside of Thinkorswim is that the micros commission is just as high as the standard commission. And so the commissions, I think, keep a lot of people out of taking that style. So I don't know, just a thought. I wanted to kind of bring that up as an idea for you to kind of consider. Now you've got it. The key though is you've got to move your stop up when that happens. All right. Next, let's talk about the Russell. So in our Russell yesterday, we had looked at this hourly supply, and this hourly supply level that we had in here. Yeah, TradeStation does have lower commission on the micros. A lot of brokers do. Thinkorswim is not one of them. On the Russell, we had a supply level. We got a bit of basing here in front of the supply level, and then we came into it in the Globex session. And then 1, 2, 3, 4, 5, 6 candles later, we had gone basically nowhere. So that was clutch to say, okay, this thing isn't going to go down, and let's stay the heck out of that way. And we then popped up above this 1590 level that we've kind of been looking at for a while as a potential reversal. But did we get clean and clear basing right in front of the zone? What do you think? Did we get clean and clear basing right in front of the zone in here? Not really. I mean, you got some down here, but compared, right? So you got some basing down here, but compared to this basing that we had here, that's the kind of basing that we want to see before a potential breakout. And so since we didn't get it, I would be a little bit more concerned with taking that on a breakout. Now, I think for a reversal trade, though, the Russell's still in that 4-hour trend. We've got that 4-hour kind of sideways price action breaking above. All of our resistance levels, all of our supply levels will become confirmations for certain. They'll all be confirmations for certain. See, fly slot. If commissions are the biggest driving force, why not wait for a better R trade? So fly slot, I would agree with that, but I think that, I try to cover all my bases because I know everybody's got different styles. I've got 190 viewers live right now, and everybody's got their own style that they want to use. So I like to kind of cover both because there's a lot of people that they're very okay taking 2-to-1 trades. If you're waiting for 7-to-1s, 9-to-1s, 6-to-1s, 4-to-1s, it gets a little bit harder. I know a lot of people that make a heck of a lot of money doing 1-to-1 and 2-to-1 levels, and I'm okay with that so long as you allow yourself a way to make them run. And so different people in different setups. So looking at this, I think you're better on a retest. I'm going to take this 15-minute level away because if we break through this 4-hour, I think that 15 minutes going to get cut through like a knife through butter. And I'm going to put a little zone here at this. I don't normally use 4-hour levels, but I'm going to look at this 4-hour kind of wick over wick there, 1574 by 1568, because that would be a retracement back to the midpoint of this range. That would be a retracement back to the midpoint of this range. And we could see, I think, a decent reversal at that level. So I think that could be a good setup. An iron condor candidate, it could be an iron condor candidate. Most people would do the actual index or the IWM if you're going to do that. And if you're going to do the index on the rut, you'd want to stay somewhere in this area here. And I'm looking specifically at this supply up here and this demand right here. So you're looking at 1488 by 1667. And I don't think you're going to get a very small, but let's go out. Let's do this one. What did I say? 1488 by 1667. I know not all of you trade options, but I certainly think it's worth diving into and taking a look. Let's see, the 1485 by 1480 is going to get you a 30-cent credit, and then what was our number there? It was 1670. And it was 1670. So the 1670 by 1675 gets you a 27-cent credit. The 1480 by 1485 gives you a 30-cent credit. And in this case, you're looking at a 9-day iron condor. So you've got the wings at 1480 by 1670. 1485 by 1670. So that puts you here and here. All right, so that would be your range there, and that gets you a 57-cent credit on a $5 spread. To me, yeah, I would agree, Andrew. I don't know that that's enough premium. What is our minimum premium that we want to see on an iron condor? Can anybody tell me what our Traders Army rules tell us that our minimum premium that we want to see on an iron condor? Percentage rate of return relative to the spread. So John and Andrew, 15% is what I'm okay to take on a one directional position. So if it's a bull put or a bear call, bull put or bear call, I'm willing to take 15%. Nathaniel, you got it right. On an iron condor, I want to see a 25% rate of return on capital invested. And in this case, I'm looking at 57 cents on a $5 spread. Now, when I do the math on that, if we do the math on that, it's 57 cents on a $5 spread. How do we do the math? We take the $5 spread minus 57 cents. That tells us the capital that's tied up, 443. So if I take 0.57 divided by 4.43, I get 12.8%. So this is about half of the credit I would normally like to see, right? And that's before commissions. So now, the other side of that, but you always talk about the other side of that. The other side of that, this is a 9-day option. And what is also included in one of those days? In those 9 days, what's also included? Right? If you think about it, you've also got a holiday built in there. We've got a U.S. market holiday built into that 9 days. And so with a U.S. market holiday built into that 9 days, as well as a weekend, you have a lot less trading days, so your probability goes up. The thing to always remember when you are, for those of you that trade options or talk about options, and I know when I normally talk futures, and we'll get to more of the futures in a minute, but the thing to remember when we talk about options is this. Let me clear this canvas. The thing to consider is I always consider it like a teeter-totter. And when I think of it like a teeter-totter, imagine, if you would, that you've got a teeter-totter line that kind of looks like this. And sitting there and right there in the middle, you've got probability on one side and rate of return on the other. And whenever you're doing credit spreads, you have an inverse relationship. If probability goes down, rate of return is going to go up, right? If probability goes down, rate of return is going to go up. Well, same thing. The same way goes. If your probability goes up, your rate of return is going to go down. So in this case, we've got a lower rate of return than what we normally want to see, but because of the free theta day, we achieve the extra degree of probability. So if you're more concerned with probabilities, then you might be very much okay with 12.8% over a 9-day trade. Make sense? All right. So just something to consider and something to think about. And by the way, we're going to talk about some of these bigger picture equities positions in our tomorrow night session. So for those of you that want to join us, like I said, tomorrow night session is all about longer term presentations. I'm going to do a session on where do I think the equity markets are going to go. And we're going to talk a lot about what's going to happen with the equity markets in the U.S. economy based upon the election, and how can I use options to hedge and protect some of those positions. So, when I'm looking at this, I know right now we're looking at our 1 hour and our 4 hour and our 15-minute charts, but realistically, we also got to know what's going to happen on that bigger picture. So, all right. And then looking at the Dow Jones from a day trade perspective, get back on my train here. Looking at the Dow Jones on a day trade perspective, we are not back to all-time highs yet in the Dow. We're at all-time highs in the NASDAQ. We're at all-time highs in the S&P. We're not such an all-time highs there in the Dow as of yet. And getting a bit of a pullback in the Dow would be actually super, super healthy. When I look at this, my eyes immediately trade to this. And I don't know how many of you guys, your eyes trade to that level, but my eyes immediately go to right here. And the reason that my eyes go to right there are those 3 wicks that are all at the same zone tells me that there was price rejection at that level. And that price rejection was 3 straight candlesticks at that exact number, and then we were able to muster up enough buyers for, boom, price to move. And price moved out of that 28,500 level and just continued to run. So I think that's actually a really good area of demand. And on a 4-hour, if I look at that, that pullback would still keep us in our upward trend. Now, it would also indicate a slowing of momentum, but I think that's okay. You still have a pretty good move coming out of that zone. All right, let me, and then the supply levels up above me, I kind of feel like that supply level up above me, still valid, 29,000, actually nice whole round number, but it has to be a confirmation if you want to take it, okay? So those are our equity markets. Any questions on equities before we move off to commodities? And I'm going to put that webinar link in the chat box. So if you guys want to make it to that webinar tomorrow night, it's tomorrow night at 7 p.m. Central. Myself and Corey Lane are going to be delivering it. I'm going to talk a little bit more about the bigger picture positions from an investment standpoint, and then Corey's going to talk about using options to protect it and hedge it. All right. Next, let's move over to our bonds and, our commodity markets. If you guys have no more questions on equities, let's go to commodities. Now, crude oil. Not sure if any of you guys got into the iron condor we talked about in crude, the 45 by 41, but it's staying pretty much in between there. For those of you that utilize that setup, it's staying pretty nicely in between that region, and we are very sideways in our 4-hour level in crude. Now, my gut told me that crude would make it to 44 or even 45 by the end of summer. I guess technically September 1st is the end of summer, and so we're not quite there yet. We just barely missed it. But when you think about the run we've had in crude, my expectation was a bit of a breakout above this 43.74. I'm not doing anything in between this region until I get quality basing and a breakout above 43.75. I don't see any reason to do that, right? Anything below 42.23 is really when I would look to get short if I get quality basing. In the meantime, I got nothing. A whole lot of nothing going on. For those of you that remember the show Rudolph when you were a kid, Yukon Cornelius, he'd go, nothing. And that's what I feel about this. So that's a good point, Dennis. Technically, fall doesn't start until the 21st, and traditionally in the U.S., we consider the end of summer being Labor Day, right? So I still have time. That's what I keep telling myself. Yes, let me share that equities grid. No problem with that, Prashant. I will definitely share that equities grid. Share grid. For those of you guys that are unaware, we share this every day with our in the trade feed update. For those of you guys that are members, go to the trade feed update. We share this every day so that then if you're a Thinkorswim user, you can just open up the charts in your platform. If you're not a Thinkorswim user, when you click on that, it should take you to at least a picture of where we drew all of our lines. Yeah, Dennis, another hurricane, we may hit our price. Well, my mother-in-law, the kids call her Nene, and Hurricane Nene is out in the Gulf. I got to tell you, if Hurricane Nene hits, no one's going to be happy. So, oh, that's true, Liz. This upcoming summer, Liz, I love you. You're always thinking. I like the way you think, young lady. Way to think. All right. Yeah, when Hurricane Nene comes a-calling, people are going to have problems. All right. So looking at gold, we have gold is on a daily chart. A lot of wick has been happening. It's a lot of sideways chop. On our 4-hour, we popped above a potential breakout level, and we talked a little bit about this yesterday. We popped above the breakout, but we didn't really get any strong indication as to, hey, you should get long. There was no immediate basing before the level. So I left the line on the charts wondering, is this going to serve as a support level when we come back? And the answer to that was an emphatic hell no, as it just blew right down through that area. And so looking at at this 15-minute level we had here, we got a little hit off of this zone, and then because remember it's a 15-minute level, and your stop goes down here below this pivot. You got a little hit off the zone, and then we popped just below the pivot before then rallying back up and then just chopping around in it. So then it became kind of obviously it was a dead level at that point. Now, when I look at this from a 4-hour perspective, our trend was technically starting to head back up, and now we've seen a lot of weakness on that trend. So for me, gold, just like crude oil, I don't really have much as far as trades that I want to jump into today. Okay? Tennis, that's awesome. There's nothing I really want to jump into today. We've got this hourly level here that's a confirmation entry. I still think that one's okay, although not the greatest. Looks like there's frankly, a little head and shoulders pattern here forming in gold, although that would have to come after a bigger move up. I'm not really in love with any of my positions set up in gold until we get down around this 1900 level where we've got a reversal off of a decent pivot. So if you want to give this a shot, I think you've got a decent opportunity here if it's a confirmation. We could theoretically actually come a bit lower. The reason I chose this upper level is the time of day. Time of day on this is right around the European market open. Time of day down here is inside our Asian session. And then you've got a pivot area right in here as well. So, in what we saw yesterday in the NQ, we reversed at the level in between that zone, and it was at that time. So you could theoretically allow this to be a confirmation, and then as price comes down lower, you could get long when it comes into one of these lower levels. So do I see a possible breakdown below the Globex? Well, below the Globex low, you mean, Liz? So down in below here? I think we could break down from there, but I would need to, once again, get the basing that's required in order to make that trade make sense. Because we've got a couple of levels here. The downside of that is if you notice, we already if you just use this line here, 1960, we actually just popped a bit below it and then rallied up. So, all right. Next, Nat Gas. Nat Gas, we have come right back up to the gap fill area, and we are actually in that zone as of right now. So anybody who's interested in that level, if you want to take that, understand where your target has to be. Your target has to be here because that's my opposing supply area, right? That's got to be my first target. So if I take this, I've got a limited reward up to this region here. It's still an okay level if you're willing to take 2-to-1s on that move, which it's a gap fill trade. Now, it's also the second time we've come back to this level because this was the first time we pulled back into here and gapped up out of that zone on the contract rollover. Level is still valid, but a heck of a lot weaker. Now, when I go to the 4-hour in Nat Gas had a really nice strong move up, and we're starting to see that move up is slowing down just a little bit. So if we use the 4-hour and think about it from a 4-hour perspective, I'm going to remove this level at this point. I would actually want to come all the way down because I would believe that the 4-hour would cut through these levels until we would get to 2.2. That 2.2 area as my strongest area of demand, and that I think is going to act potentially even as a price magnet. So if we start basing in this region where we're bouncing off of now, if this becomes an area where we base, then I think you've got a breakdown trade. First target being 2.325, second target being 2.211, where then I think you've got an opportunity to go long, stop below the pivot down here. Okay. Copper level, we've got a little bit of sideways price action in here. We came close to the zone and popped away, which makes it go to a confirmation. It was a confirmation to begin with. On our 4-hour in copper, we've got a really nice move up and a pretty good pullback. And so this shape, which is a shape that I frankly love, for those of you that kind of see what we talk about on a pretty regular basis, this strong move up and a pullback. We talk a lot about this bull pullback, and oftentimes You know, when I look at my favorite setups, and it's not rocket surgery, as one of our former U.S. presidents said. It's not rocket surgery, people. Um, my favorite setup is some sort of a bull, and then we have a pullback, and then we've got a bull, and then we have a pullback. And typically the bull move is going to be my impulse move, and my red line there is going to be my corrective move, right? So when we think about a corrective move, a corrective move will oftentimes be a Fibonacci retracement of the impulse move. And that impulse move, let's say that impulse move is on a 4-hour chart. Well, when I go to the 1-hour chart, I'll sometimes see that it looks more like this, where prices have rallied up, right? And then on the corrective move, we get something like this. And so our 4-hour chart, which looked like this, really looks like this on the 1-hour, and that's my best setup to go long, right? And that is a very, very common setup. Murray, yes, a lot of people would refer to that as an ABC setup, point A, point B, point C, and then you get long as it comes back out. I actually learned that from Jeff Manson, actually. Jeff Manson, one of my first ever futures instructors, he went through the ABC setup and pattern. And he was very specific in his measurements, right? He would go point A, point B, point C, and then I think he would get long at 12.5% of this move up from point C. And he had a very structured way in which he did it, which I always thought was pretty good. But ultimately, what I'm looking at when I see that is we have that exact price pattern right here. And so I think your better opportunities for price to head higher. And when I look at price heading higher, that's what makes me very wary of any of these supply levels up above me. If we get some basing right in this region here, I think you can get a strong move up out of that level. So, Sonia, he's still very specific. Yes, he is. Ryan Johnson, rocket surgery. Which one of our fearless? I think it was Will Ferrell. Ryan, actually, I think it was Will Ferrell who was making a George Bush play, but it was funny anyway. Let's see. Please look at short corn ZC short at 359 on the 1 hour. Let's do that. Let's go to corn. So in looking at corn, we had actually a and when I think of fearless leaders, I think of Will Ferrell. We'd actually had a 1 hour setup. It's my 360. Kind of above this level, we were looking at this area here for a potential breakout. The market actually gave us a fairly clean amount of basing and then popped above there in the Globex before then really, really selling off. I mean, just a strong, strong sell-off. And so that was not there wasn't 3 clean touches on there. You know, we just had that line kind of up there as resistance overall because it didn't quite reach any of those levels there in the past. And unfortunately, there was no setup for us on this one, you know, in the overnight. When I look at a short off the 359 area, my eyes actually go a little before 359, and I look at this area right in here, right there, just before 359. So you've got, my guess is the pivot up here. I'm looking at the level just in front of the pivot because oftentimes I see those areas in front of the pivots act as catalysts for price to continue to move down. So I've actually widened it out a bit to that all the way down to the 357. You could certainly just take a smaller position, and if you want to be more conservative, just take a much wider zone, right? I mean, that's the other alternative too, is to take a much wider zone on a smaller position. Because I think there's a chance that we can make it down to 350, right? Or even to this gap fill area down in here. All right, any more questions on commodities? Oh, let me look at silver. I know a lot of people look at silver. Artur, I can't read that, man. It's not my jam. Let's see. On silver, we had talked about this area here for a potential breakout. We did get a little bit of a move away from that zone. It's showing a bit of weakness here lately. On the 1 hour, if we get a pullback, I think there's still decent demand right in here. On a supply note, I really like this area up here. 26,685 by 28,834. Rally base, very strong move away. I think that's a really clean area of supply. All right, let me go back to my commodities here. I'm going to share this grid. Andy, ES is basing as you expected. Lots of support below. Is it going down? So let's go take a look at her. So we're basing, at this little reversal point, a little bit of basing. I think that we could make it down to this 35.30, and if you want a day trade, you could take a day trade at a breakdown below 35.44. Just be aware that if you take that day trade, the tightest your stop can be is about 35.51 right up here above this pivot. I mean, technically you could make your stop at 35.49. So, and I think you could see price push down into this 35.34, 35.20 area. All right. Let's see. Oh, David, take a look at soy. I forgot about soy. So looking at soy on a 4-hour chart, very, very, very strong move up. Almost a parabolic move up, but we still have some demand areas below us that have not yet been tested. I still think they're pretty clean. The first one being this little red candle right in here. Now, this could be considered by a lot of people a speed bump. And a speed bump in between there where we have this rally base, very strong rally. So what I'm going to do is wrap my lines right in here. And if I wrap my lines right in there, 926 by 924, that's a pretty good area, pretty good zone. So I'm going to switch this actually to a confirmation level, and the one below it as a limit entry. Okay, I think that's a good way to go. Hello, Husan. All right. Last, but certainly not least, bonds and currency markets. And I want to try to make sure I'm out of here by the top of the hour. So in our ZN, man, that ZN has totally reversed on us after I thought, okay, we're about to see some weakness in the bonds. Bull. The bonds decided this week that they were going to come crawling back up, and we did. We saw a lot of strong movement back up inside the bonds. And so that started really Friday afternoon. After we had looked at potentially a breakdown in there, it just never really came to fruition, and we've seen that it now has some strong momentum heading back up. But I don't have any super clean levels above us for me to lean on and for me to jump into. There's nothing up here that's super clean. You saw this nice reversal here, that's where we hit and moved away. Base in front of it, dropped a little bit. We've touched it again, moving around. So you could actually get a breakout above that region, but there's nothing on here that I'm in love with. There's nothing on here that says, oh, I'm gonna trade that one. This area here is probably the clearest. But other than that, there's nothing on there that I'm in love with on the ZN. The Aussie. So in the Aussie yesterday, we talked about this as a potential breakdown. We did actually get some basing in front of the level. 1, 2, 3, 4, 5, 6 candles later, the market had gone nowhere. So we take our stop on this red candle, move it to break even. Technically, you're still in that position if you follow those rules, right? 1, 2, 3, 4, 5, 6 candles. If you did not get in, I wouldn't get in yet. I wouldn't get in now. And the reason I wouldn't get in now is because my 4-hour is still up. And when I look at my 4-hour trend, if I just pull a full Fibonacci from this low to this high, let's pull a fib from this low to this high, our most recent area. What do we see right there at our demand level? Right at our area of demand, right at our demand zone is exactly right on our Fibonacci retracement level. So we're sitting, that demand area on the 1 hour is right inside the 4-hour fib level. Now, by the way, I don't make decisions based upon fib levels. Fib levels aren't what guide my decision making. What guides my decision making is that it's a quality zone formed at a pretty decent time of the day with a strong move up that's not yet been retested, right? And I've got a fib level there to boot, right? If you're still in the trade, I would say your stop should be at break even. But if you want to move it and lock in some profit, I would say right above this 5 a.m. hours high. So right there at 73.52. Okay? Right above 73.52 to kind of lock it in. But 73.16 by 73.04, we're coming back into that region there. If we get a good reversal, if we hit that on especially on a 4-hour, because I'm looking at the 4-hour as a impulse move, is this a corrective move of our last impulse move? And if we get that to reverse, then I think you could actually have a pretty nice runner on your hands. The euro, so in our euro level yesterday, we had price came into this hourly level and we got a little bit of about a 1-to-1 bounce out of that zone. And then, I mean, that's where you can see this big, strong wick that came into it, which is great, right? I love to see those wicks that kind of come into it. And then we came back up and I was feeling good. And then it said, no, I don't really want to do anything. I don't really want to move much. And it completely changed our overall direction, right? So when I go to the 4-hour, we can see, okay, that this now brought us below some of these prior pivots. So by getting below some of these prior pivots, like this one here, right? By getting below some of those prior pivots. Now, we based a little bit at that pivot, but by getting below there, that showed continued weakness. We are coming to a pretty good area of where we'd had a breakdown trade in the past. So this was a potential breakdown trade, and we're coming to an area of fairly clean demand. What I'm going to do now is look to this area above for supply, 1.19 as an area of supply where I think we could see a decent reversal, and then an area down here is still valid for demand. But if we put in a lower swing high between now and then this has to become a confirmation entry. So we change our lines to reflect a confirmation entry. All right, Canadian dollar. Canadian dollar, very similar to the euro. Move came in, and then we got, 1, 2, 3, 4, 5, 6 candles later, we'd gone nowhere. Actually came below and hit that stop out area, but also setting up now for a break. Oh, I was using a 30-minute on the 1 hour. Oh wait, hold on. Are you talking about on the euro? Holy crap! You're right. I was. Thanks for that. So I need to move this. Not much change. I'm just gonna delete that. I hit on that more often than I want to. All right. Thanks for that. Okay. So you would actually move that up a little bit, 1.1904 by 1.1915. Thanks, Andrew. You're awesome. Hello, Kitchen with Samina. Canadian dollar. Canadian dollar, I think, is, and I don't know. I think that's at one of the defaults, and I just didn't delete it. And I never use 30-minute charts. That's the worst part about it. All right. On the Canadian dollar, I think that we could have a breakdown below here, because as I look at my demand below me, you've got this one here, which we got a nice bounce off of that was fairly clean, but I don't really have anything until then. So if we continue to get basing there, you could have a breakdown for price to kind of keep running on that move. All right, Great British Pound, similar to our other currency markets. And remember, when you find a demand level in all the currencies that was formed at the same time, if the dollar makes a move, they're all gonna be a little bit wonky, right? 1, 2, 3, 4, 5, 6 candles later, it had gone where? Nowhere. And so the dollar was the one really that determined all of these markets. The dollar was the determining factor in all of these markets kind of going nowhere, because these are all traded against the USD. So since all those are traded against the USD, and the USD decided to change a direction, all the currencies will as well. that we looked at. And so now when I look at this, if I look at my areas of demand below me on a 4-hour chart, this area that I've got as the 15 actually looks a heck of a lot cleaner. If I just look at this on the 4-hour, that's actually a fairly clean zone. Let me trim that down to the 1-hour. On the 1-hour, it's nowhere near as pretty, but on the 4-hour, that level actually looks pretty good. So one of the things I would say is you can take the 15-minute area, which is this zone right here of demand, or you can use a 4-hour candle-to-candle style at that level. And the reason I would say candle-to-candle style is because you've got this area of resistance in the past. Old resistance oftentimes acts as new support. So you could wait for price to come back up through that area. All right, Japanese yen. Japanese yen, we don't have anything close to current price until way back here, which is the origin of this very strong rip. And this was a heck of a rip. If I move this to a smaller time period, call it a 15-minute chart, and I'm looking inside of there for a better entry, well, looking at current price and then looking back into the left, you do actually have a small little level right here on a 15-minute that if you're looking for a day trade may hold and give you a little move. 94,283, 94,314. All right, let me check my equities markets. Uno más. One more time. And we are doing that 15-minute kind of basing right in there. So if you want to take that, I mean, you certainly have an intraday opportunity there. We talked about the exact same thing in the NQ. If you want an intraday opportunity, I think you have it if there's basing for a very small move down, okay? I told you guys about it. Tomorrow at 7 p.m. Central is our quarterly long-term investment checkup. We've tried to do one of these a quarter. No need to register for the event. It's a totally free session. Do me a favor if you would. I'd love it if you'd share it with somebody else. Let them know that they can come. All you got to do is click this Join Live button, and you will go right into the room. This is not day trading. It is not day trading. This is much more bigger picture stuff. And what it's really doing is we're going to set up for our upcoming sessions. We have upcoming sessions in our Traders Army site on what called Wealth Essentials. And those Wealth Essentials sessions that are upcoming are really going to be where we start to focus on some of the big picture stuff. Liz, we have currently thinking about it being a 1-hour session, although I'm going to do the first bit and Corey's going to do the second bit. So you know how Corey likes to teach, man. He can just keep on rolling. So I want it to be a 1-hour session. And in there, you know, like I said, I think I told you guys a little bit about it on Sunday night that we're going to have a little bit of time built in to talk about what it is that we're going to do. So, all right. So that's all I have for today. Oh, the New Zealand dollar. Yeah, we can take a look at that. Yeah, we have it slated for an hour, but you know, when Corey starts teaching, who knows what's going to happen. All right. So looking at the New Zealand dollar, and I love him with all my heart, but man, he can go. He could teach for a long time. So looking at the 4-hour, we've got a very strong move up, very strong big bullish market in the New Zealand dollar. Slide that back to the 1-hour, we're definitely seeing momentum getting weaker. My eyes are immediately drawn to this level right here. And that's 669 by 667, I think is the good one. And I think that in here where we would see a decent reversal is if price comes back down into there with some decent force, that would quell the slowing momentum, because we are definitely getting slowing momentum. It's kind of halfway in between this move. And if you're more conservative and you trade off the 4-hour, you might look to this area down here. Okay. Adriana, yeah, his 3 hours is usually pretty good. So, all right. David, JPY and MP1 often move same direction with the USD. Can you give your thoughts on it? Well, I don't really have any big fundamental thoughts on it. I don't think too much about it in that way. When I look at what it's doing as far as in the direction of the dollar, when I look at these different markets, you know, the dollar and the yen, if I kind of compare them, right? That's been our dollar, and we've got a big old gap up on that thing. There's our dollar. Oops. And there's the yen. So in looking at them from the perspective of that they trade in a similar direction, I don't know that I would agree with that completely. I think that we've seen actually that they've been a little bit more, you know, sideways as of recent, but typically they're not actually overly correlated to one another. I actually find that the yen is probably less correlated than the other currencies to the dollar. So no, he would not make a good competition, a good politician. Samira, hello to you as well. All right. That's all I have for everybody. I'm going to turn this thing off. I hope you guys have an absolutely amazing day. As always, if you have any questions, shoot us an email, support@tradersarmy.com. I'm going to turn this off. I will see all of you Traders Army members in tomorrow's live room. And then hopefully I'll catch all of you in our session tomorrow night for our big picture analysis. I'll talk to you guys soon. Have a great day. See ya.